Welcome back. Now, if you own a property, seller financing is really going to improve your profit significantly. Now, you can do this, and before this video ends, you'll have the concept, and you can do this anytime if you own property. You can do it anytime if you own the property. It's perfectly legal, it's ethical, and it's in use across the United States in many different environments. So the question always is seller financing a good idea? It's not only good, it's much more profitable than not using seller financing. All right, so it's going to be very interesting for you to see some of the different ways that people sell properties and they finance them. I mean, buyers want help with low down payments and low installment payments. Sellers, they want to make as much profit as possible. All right, but selling is a difficult strategy for most people. So if you want to sell, you want to have a competitive advantage, well, then think seriously about seller financing. So if you're brand new to real estate, some of this is going to be new to you, but it's been around for well over a couple of hundred years. So seller financing is pretty much used in the Middle West for almost all properties. So ranches, farms, agricultural property. It's also used on office buildings. But on the East Coast, they use mostly mortgages. If you use a mortgage, you're going to have problems because you're going to have to worry about foreclosure. I won't go into that now, but foreclosure is a big headache if you're trying to get your property back. In the West and in the South, they can use deeds of trust. We're going to try to encourage you, and we teach it, try to use a contract of sale, selling with an installment sale so you can increase your profit. Less work, more payments. Less work and get more payments. Okay, so I've been involved in real estate for my whole life, and I'm going to tell you, seller financing is one of the best ways that you can make money. You can end up working once and getting paid for 10 or 20 years' time. In some cases, you could get paid for 10 years, and they still will owe you as much money at the end of 10 years because people want to finance things. All right, now sellers prefer money over time. Many of them do. Why? Because if you get a lump sum, you're going to have to pay taxes on it. So if you go to sell, you're going to have selling expenses. What are you going to have to pay? You're going to have to pay a broker, probably pay an attorney, pay a home inspection, pay an appraisal. It goes on and on. All right, so you got a lot of expenses. Not unusual for you to pay 10% of your gross selling price just in those commissions that are going to go out the door. Whereas if you thought about it and you did an installment sale, you could do much of that on your own. And if you did much on your own, you'd eliminate a lot of those costs. And you could use a title company to do all the legal work and make sure that everything was right when it ended up at the county records. Now, everything I'm telling you is legal, and it's ethical, and it helps everybody concerned. Everyone benefits. First of all, the seller benefits and the buyer benefits with installment sales, a contract for sale, or a land contract. All right, now I'm not a certified public accountant. I'm not an attorney at law, and I'm not a broker. I'm really only an author and an investor. All right, so I can't give you legal advice or tell you those things. But if you need to work on numbers, work on them with someone you know, first of all, and then go to a CPA and make sure they're all right. I'll be right back to tell you more. Okay, what are we talking about today? In this episode, I'm answering the question, is seller financing a good idea? It's not a good idea, it's a great idea. Now, we spend a lot of time in our trainings teaching people, think about seller financing and get those payments coming in, because that is what creates security in your life, having payments, okay? So we spend considerable time teaching people and educating them that they should learn how to do a contract of sale. Some people call it a land contract, or if you want to call it an installment contract, that's okay. Now, installment contracts are used for everything. Motor home, some people buy their refrigerator that way, some people buy their furniture that way. I know you bought your car that way. Sure enough, those are just installment sales, and now we're going to do the same thing, and you can do it because you're a property owner. You can do the same thing. So there's lots of advantages, and you're getting the idea. This is going to be something that will help you make more money over a long period of time. All right, now America buys everything on installments. They want what they want right now. In other words, they want to have satisfaction of a new car. They don't want to wait till they save up. They want the new car now. They're willing to pay more for the car and more for the finance. They want a big camper to drive wherever they want, to Yellowstone Park or whatever. They want things now, so they're willing to accept payments. So that means they'll simply do this. With a real estate, we call that a contract for sale. Now, why do we use a contract rather than a mortgage? A mortgage might take 2 years to foreclose if the people don't pay. With a contract, we can sell to the individual, but we don't have to give them the title. We got a contract, and when they finish paying the contract, then we can give them the title. So you're going to make mortgage payments. Now, some of these people are making mortgage payments. Why not have them make installment sale to you, and then if they don't pay you, you can just evict them. But the point is, you'll make a lot more money with the installment sale. All right, so the public doesn't necessarily care. They just want to move into the property. So if you can sell with a contract to sale, call that an installment sale, and get payments coming in, you're going to take your profits. Not only are you going to make the margin for buying it low at the auction and then selling it for close to a market price, you're going to make that margin, but now you're going to make the margin on the financing too. So I've been involved in real estate my whole life. Last 30 years, I've done tax liens and tax deeds. Why? Because I found with tax deeds, I could show up at the auction and I knew exactly how much money I was going to make when I bought it. So in other words, I bought it and I knew how much it would appreciate and how much I could sell it for. Whereas most real estate, at least my first 30 years of it, I had to put the rents up, a little bit at a time, put the rents up to increase the value of the house, to increase the value of the apartment, or to increase the value of an office building. All right, so that all took a long time. Basically what that was, it was a marathon, it wasn't a sprint. Now with this business, it's almost a sprint. Why? Because you can buy it, you know, if you got it for 30 cents on the dollar, you could sell it for 60 or 70 cents on the dollar. So you're getting the point. So my name is Ted Thomas. I've been involved in this business for over 30 years. When you buy tax lien certificates, which is what I do, you're going to find out you get a safe and secure investment. When you buy tax defaulted property, well, I like those because I can buy them for 10 or 20 cents on the dollar. So I'm kind of get into some examples so that you can understand this a little better. I don't know who you are. I don't know how old you are, but I know that life has sent people some curveballs along the way. So some of you had sickness, so you didn't pay your bills on time. Maybe you didn't take care of your credit. Some people had a house foreclosed on. That's not taking care of your credit. Or maybe they had a bankruptcy. Well, you're going to have a tough time going to a banker and expecting them to finance you because your FICO score is crashed down. And when it has, you're not going to be able to get financing. Banks are going to reject you. So you'll need to find properties that are being sold by sellers. Now, if you're a seller, you want to say, wow, there's a whole market out here that nobody's even talking to. If the bank's rejecting 10 or 20% of the people, why don't you think about maybe you'll accept them? Now, you don't want to get in the credit industry, but I can tell you this. If a person has a good job, they've been at it a long time, and they're making good money, why wouldn't you want to sell to them? Because you're not going to give the title to them. You're going to have a contract. If they don't pay you, just take your property back. That's just a simple eviction. All right, so I get it. What I'm doing is I'm answering your question. Is seller financing a good idea? I think it's a great idea. So kind of follow along. Let me guide you a little bit, and I'll try to show you some of the real pluses in this business. Now, I don't have a lot of time in a video, but you kind of get the idea. All right, now, you want to get a deed to a property. Well, you're not going to get the deed or the title to the property with a contract of sale until you're paid for it. But if you're a seller, you're the same way. You don't want to give up your title until you know you're going to get all the payments on the property. All right, so the government years ago made a process. And the process they made simply said, people must pay taxes. If they don't pay taxes, we're going to take the property back and we're going to auction it off. Well, I learned about those tax liens and deeds 30 years ago, and I've never looked back. Why? Because I could buy property for 10 or 20 cents on the dollar. Well, if I can buy for 10 or 20 cents on the dollar, I know I can sell it for 40 or 50 cents on the dollar, or I'm not going to buy it. So that gives me a competitive advantage. I make my money when I buy, and I'm going to discount it to get rid of it and use what I call a Walmart strategy to get rid of it. That's happening in 5,000 auctions every year across the United States. All right, I didn't make these laws. The legislature made the law. The legislature simply says to each one of the counties, you get that treasurer and the tax collector out there, and you, number one, levy the tax, collect the tax, and if they don't make their payments, confiscate the property and resell it. And I like to buy those resell. Now, those resales sometimes are a little bit used and abused, but what's the county doing? They're not only selling the property and putting it back on the tax roll, but look at this slide. the county cancels, they wipe out the mortgage, they wipe it out. So now you're buying properties 20 or 30 cents on the dollar. Well, I can sell those all day long for 40, 50, 60, 70 cents on the dollar. And if I sell them with seller financing, I'll not only make my profit on the margin, but I'll also make profit on the financing. So let's use an example of that. So let's take a $100,000 property, all right, and you're going to buy it at auction. You're going to get a 60, 70, or 80% discount because the county doesn't want the property. They just want to get their money to get the taxes each time. So they're going to discount it 60, 70, 80%. Now, some of them are abandoned, some of them are used and abused. But the point is, you get a chance to look at all those properties. So imagine yourself buying a property that was in decent shape, and you can look at every one of them. What would you say if you could get it for 60 or 70%? You'd say, I'm going to buy you in right away. Now, this episode isn't about buying. The episode is about using seller finance to sell it. So you be the judge and the jury. Let's see if this would work for you. All right, so the student, my students, trying to buy for 10 or 20 cents on the dollar. So I'll use an example here that's very easy to understand. So the student's going to pay 10% of value. Now you might pay 20, so you can do different math. But the point is, the property is valued by the tax collector at $50,000. And my student buys for 10 cents on the dollar. So the student paid $5,000. Is there plenty of room? Is there plenty of margin here for a profit? Okay, well, there is plenty of room. But what do? I encourage them to buy low, and then I encourage them to sell low. Now, what do I call that? I call that a Walmart strategy. In other words, Walmart and Costco and Target, they all buy low and they try to sell it low because they want to make it all happen quickly. Why don't we do the same thing with a property? All right, so the student uses my Walmart strategy. All right, to start out with, we know the value. People in the neighborhood know the value. All right, so we're not going to try and get the full value. Let's sell it for $35 using a Walmart strategy. Then why don't we get $5,000 down payment? And then why don't we give them seller financing? Oh my goodness. Now the client that's coming to you to buy is going to be really interested because they don't have to go to a bank. They don't have to do appraisals. They don't have to wait for the banker to say yes or no. They can make it happen right away. So what are we doing? Well, we're not only going to sell them the property at less price, but we're going to give them payments. And if they can make payments, you can give them as many years as you want. You want to give them 10 years? That's 120 payments. Wow, what kind of math does that work out? Well, I tell you, it works out pretty darn good because if you take that money and you add it up, you're going to see that that assessed value was still the $50,000. But what are you going to get out of the deal? Well, if you just sold it for the $35,000, you get $30,000 profit. That's pretty easy to understand. But what happens if you finance it? Well, let's just take a look. If you sell it with financing, you still sold it for $35,000. You still got a $5,000 down. Now you're going to take that $30,000 and you're going to get payments for 10 years of $350 a month. That's $42,000. Wow. You not only get your $5,000, but you got the $42,000. So now suddenly you brought in $47,000 and you only invested $5,000. All right, you're getting the idea. Now, look, I'm not a CPA. I'm not a real estate broker. I'm not an attorney. I'm just trying to give you some idea. Now, there's truth in lending. There's disclosure statements in your state. All I'm doing is trying to teach you the concept today. If you get the concept, you're going to be okay. So as I say, I'm not a CPA. I'm not an attorney. You need to figure this stuff out. But if you see what you just saw, you saw a $5,000 investment turn into $47,000 over a period of years. Well, the banks have been doing that for your whole life and my whole life. So why did you start thinking about doing the same thing? Now, my previous slide, I mentioned below me there's a free gift. And I also mentioned be careful at the auction. Don't buy anything you haven't seen. I also mentioned the big mistake is know your exit strategy before you buy a property at any auction. My name is Ted Thomas. I'll see you on the next video.